Hello. Hi there. Welcome back to Traders Talk, a show which you should not miss. Yeah, hi, this is Ming Hon, and I am the host for Traders Talk. Yes, this is a Tuesday, and we are good to go. Yes, things seems very interesting in the markets. And of course volatility is still there, but of course this time round the thing has actually changed a bit. Things are a bit greener this week or since last week things has been a bit greener. And of course in the world things has not been so nice because Ukraine has been in war now. Russia has just invaded Ukraine, to everyone's surprise. In fact, I was also very surprised that this has really happened in Ukraine. Yeah, and of course, when things when people when we are put into surprises, I think different kind of things can actually really happen. And the same thing for the market. And if you have actually seen the market last week when the invasion happened, right? It is actually very strange, right? And the market has actually went up instead of going down. And of course, we have to actually dissect a bit what really happened when on the I think it was last week, Thursday 24th of December. Sorry, 24th of February. Then we'll actually dissect that, and we will also explain what has really happened, and as a trader and also as an investor, how you would react, or you need, or you can take opportunities in that situation. Yeah. So for those who have just joined us, welcome. And for new people who have joined us for the first time, yeah, I am Ming Hon, and I am a trader. And of course, this is a show where we will actually share things about the market and also do a bit about investing and trading education. Yep. So this is what we do at My Style Work, and we hope to um, educate more people to actually get involved in investment and trading, because that is something which will benefit people in the long run. Yeah. So great. Okay. So let's go to the markets, right? Last This is actually S&P, right? As I said earlier, right? What has really happened last Thursday is that this is actually the day where Ukraine was actually went into war, and the troops actually went into Ukraine. This is actually D-Day. And of course, if there is actually negative news, right, we would actually anticipate that the market would actually go down, because war is something which is not good and people don't like, and will actually cause a lot of economic damage. Yeah, whether it is actually for Ukraine, a small country, or even for the neighboring countries around there, or even the global world. Yeah, because everybody is actually involved. Involved in a certain way. The US is of course yeah, heads in the NATO. The whole NATO is also part of many countries, and also globally, everybody is actually looking into this. Yeah, and of course, what happened after that was actually all of them actually came together and actually started to start sanctions, and to actually punish Russia for actually going into the invasion. Yeah. So this has actually happened, and of course, certain markets have reacted in a certain way. The S&P, if you look at this candle, is actually a very bullish candle. Yeah. In fact, before that, the market was mainly coming down. Yeah, the market was actually mainly coming down here, right here. Whereas on the day where the invasion happened, the market has actually gone up, and up to today, it is continuing to go up, and it's actually not a small up. You see, it's actually quite a big jump from the time it dropped to the lowest. Right, it's actually about a 6.6% increase in only 3 short days. Whereas from the highs to the lows, right, it actually took about I think it was about here. Was this a high? Yeah, from the market high. From the market high in January to here is actually it took about 2 months, right? About 2 months. Yeah, 2 months to go down by 17%, whereas it only took the market it only took the market 3 days to actually go back up by uh, 7%. 7%. Just let me put this back. Yeah. Okay. So 2 months to go down by 17%, 3 days to go up by 7%. Okay. So of course, you might think, what's the rationale behind why is actually the market reacting this way? And of course, what has really happened during this day? The same thing for Nasdaq, right? The other Nasdaq, right? Nasdaq is actually also the same. A very huge candle. In fact, Nasdaq went up even more than S&P. Uh, it actually went up about 8%, if not mistaken. Yeah, about 7% from the lows. 7% from the lows of that single day. One single day, it went up by 7%. Yeah, and up till today, it has actually went up by about 9.5%. And from the highs, basically, we are talking about 20, 20 from the highs to the low is about 27% difference. Yeah, and in 2 months, 27% to the lows on 24th, right? And in 3 days, 9%. Yeah, back up. Okay, so this is actually a huge swing. Okay, so when this actually happened, right? Of course, the things before this was actually there was actually a lot of uncertainty. Will war happen? Will war not happen? Yeah, of course, that is actually one uncertainty, which actually made the market move sideways, and before it happening, of course, it continued to actually went down. And of course, when the thing happened, of course, the one of the things is the uncertainty was no longer uncertain. Okay, it was already a certainty, and basically from there is actually a so-called reaction of what the world leaders would actually do, and basically how serious at that time was that invasion. So this is actually also taken into account, and of course, from that day onwards, the sanctions started, and then of course, up till today, things actually became slightly worse. Of course, before that, there was some sanctions, economic sanctions, and of course, up till I think yesterday, the thing became more serious, where um, this Russia was actually taken out of the SWIFT network. You know, the SWIFT network is basically the network where we can actually do the international transfers, right? We where they actually centralize it for the international money transfers. So Russia was actually taken offline. So basically, the businesses in Russia is actually does not have access to this trade payment system. Yeah, payment system, and actually that is a more devastating effect to Russia, and of course, towards the world. It depends on whether there is any big trades between Russia and any other country. Of course, one of the concern is of course on the oil supply, right? Oil supply. If you cut off the payment system, right? How is Russia going to actually supply oil to the rest of the world? To the rest of the world, and U.S. I think they only buy a very small portion of oil from Russia. The more supplies actually go to Europe. Yeah. So that development, of course, we will still need to see how is that being sorted out. And these are the things which happen. I mean, uncertainty became more certain, and of course, the news actually continued to flow. But of course, on our side, right? I mean, as a trader or even as an investor, right? I mean, if we actually need to look at news in order to react, it is actually going to be very difficult, because news actually comes in every time. Yeah, every time there is actually news. Let me see. Yeah. Hi Dave. Hi Dave. So let me just put this up. Okay. Yeah. So news, as I said, news actually comes in. Let the slide has changed. Okay. So as I said, news actually comes in all the while. And if we as traders, right, as if we as traders need to actually um take care of every news which actually comes in and react based on it is actually going to be very difficult investing or even trading path for us. Of course, if you are a trader, you may be more sensitive to actually all these news flows, because news flows would cause volatility. So as a trader, yes, news flows is somewhat important. And of course, it also depends on whether you are trading short term or even you are actually swing trading on a mid-term or short slight longer term basis. Yeah. So generally, as a long-term investor, you take actually you take less reaction to news flows, but you have a basically you have actually a so-called investing plan. And what your investing plan is basically a so-called preset targets of the portfolio or the companies which you actually want to invest in. Yeah. And of course, also at the same time, target prices. We have actually covered that last in the last weeks, where we spoke about target prices, right, of the shares which you actually want to invest in. And of course, because of the market uncertainty in the past months, right, and of the when the market is actually coming down, what we said is that identify the companies which you actually want to invest in, and basically set the target buy-in points which you actually want to own the shares. I mean, it can be Apple, it can be Microsoft, it can be Adobe, it can be any shares, but set target buy-in points. And of course, these buy-in points, you don't put everything at once. You basically split your buy-in points into three or four tranches, and each tranche is basically at a lower price, at a lower price. Yeah, because you would not know how far the market will actually do the correction. And of course, if you actually buy everything one shot too high, the prices may even go lower, and you do not get to buy at more discounted prices. Yeah. Yeah, and of course, like I said, as a long-term investor, news flows is less valuable, or you don't need to actually take so much, because on a long-term basis, right, whatever news that comes in, whatever war that comes in, yeah, it is actually going to be only a small blip in the market. Yeah. And of course, you can see here, this was the COVID, and earlier there was I think in when 2014 again, there was Russian invaded Crimea, the same thing. It might be just a small blimp somewhere around here. You don't even see a blimp, right? Yeah, I think there's a big blimp, and earlier the war, Russia actually also did one, right? It's only a small blimp, so it's actually really immaterial. But the reaction on D-Day is going to be big. Of course, later on we will see the big reaction, and how did the market post that reaction actually move different in a different direction, yeah, than most people would actually anticipate. Yeah. So long term wise, market always goes up. This is something which you guys have to know. And of course, the opportunities for us to actually buy in are always there, and these are the kind of opportunities which we can actually have to buy in at the good price. And of course, we are also uncertain if the market can go down further, right? I mean, worse things can actually happen. But of course, when we said to split into several buy points, that is the way for you to actually average your investment cost down. Yeah, average it average it down. Yeah, that means you buy at each tranche lower in case it actually comes back up, and over a long term it actually goes up again. Okay, and why do we actually do this, right? Yeah, today we are going to be a bit more on education. Going back to the basics to educate. Maybe there are some new traders or new investors here, or maybe they are just viewing the show after this in the recordings or what. Okay, one of the things is actually money, right? Okay, the thing is that during war, okay, during war, if you have actually a lot of money, it's going to be useless. It's going to be useless if you have a lot of money, and it's going to basically shrink in value. Okay, shrink in value. The same thing which is actually happening right now is in Russia, right? Okay, so with them going into war, and of course with the whole world punishing them right now, right? Their currency, ruble, right, has actually plunged by 30%. I think now 20% to 30%. Okay, so the currency has actually shrunk, and of course since the 214 when they first again when they went into war with their so-called former country mates, right? When they were much bigger. So the same thing, they went to war, they invaded, then of course their currency depreciated. The sanctions came in, yeah, like now the sanctions came in, and of course after many years they have actually lifted the sanctions. After many years they have lifted the sanctions, and again the same thing happened right now. Of course, are they going to recover? Yeah, I mean, it may take years for them to actually negotiate or get out of this, but of course the damage has already been done to the people, to the people, and that means they have lost value. And one of the way for us, even if you are not holding rubles, right? One of the way for us to actually not to lose value in money, right, is through investing or through buying shares. Yep. And of course, why do we do this? Is of course when we actually buy shares and all these companies, right? These are just examples of great companies. Some are not so great right now. Yeah, of course, Facebook has came down. Alibaba has also came down significantly, and of course, the rest are still great companies. Coca-Cola is doing very well. Google, Amazon, Mastercard, Apple, Microsoft, Starbucks, McDonald's are basically very good companies, which is actually growing at very good rates of 10 to 20% a year. Yeah. So basically, why do we actually do this? Is also because your currency, the money you hold, right? Yeah, basically they only go one way most of the time. Yeah, they actually go down. They only go down mainly because of inflation. In each of the country, including US, they have actually inflation, and US inflation is about eight right now, about 7 to even 8% right now. So basically, inflation is one thing which will actually make your money smaller over time. You see, the money gets smaller, and of course, in order to protect this, one of the way is actually, of course, to buy shares. Same time during the thing, like in war, right? In war, like earlier, right? I mean, how do you protect? I mean, if I'm a Russian, right? If I'm a Russian, okay, of course I would actually take all my money away lah, hide it somewhere, yeah, and of course I would actually convert and buy shares. Of course, if their assets are frozen and all this is a different story. It's a different story. But if I have ruble, right, I would actually convert it into US dollar, even though it's 30% devalued right now. There is a possibility it can even go down further. It can go down further. Yeah. So one thing for them to actually protect the wealth, right, is to actually buy shares. Okay, and of course, why stocks are actually for long-term growth, right? And if you have say a dollar, okay, and basically every year the dollar actually depreciate by 5%. Yeah, so eventually over a 10 years time, right, your dollar would actually so-called just half in value over 10 years time. But if you actually convert this dollar into a share, okay, and this share or stock actually goes 10 to 20% per annum. Yeah. So if it's just 10% and over 10 years time, your $1 would actually become simple math $10 in 10 years time. Yeah. If it's growing by 20%, then in 10 years time it actually becomes $20. Yeah. So stocks is actually one thing for you to actually for long-term growth. And of course, the other ones which I also mentioned is actually to hedge inflation and long-term growth. And of course, stocks also pay dividends. It might not be a lot. Some stocks pay 1 to 2% dividends, and some stocks might even pay higher. Yeah, and of course, that dividend is actually also an income to you. Yeah. So that actually adds on to your wealth over time lah. So this is actually where one very fundamental thing which you guys actually need to understand. Yeah, we are actually not doing this just for the sake of doing. We are actually doing this behind to actually so protect our wealth for our children and for our family legacy. Yeah, so we are actually doing this. Yeah, investing, of course, when you are actually doing trading, it's actually the same. You actually trade to generate income, and of course from there the income which you actually generated, we are also putting it back into investments. Yeah, it's okay for you to actually spend less spend less, accumulate money, save money, and all these things, put it into investments or stocks. And then from there, when the stocks go up in value of 10 20 30%, and then if you need to actually spend, then that's the time where you actually realize the profits from these investments into spending. Yeah? And this is also a very important way for you how to actually accelerate your investment or your capital growth. Yeah, buy stocks first and then use the money out of the gains from the stock, not use the money first and don't have money to reinvest. Yeah. So this is actually the thing which I actually want to speak about in terms of the situation right now. Yeah, don't react so negatively to it. Take it also as an opportunity for you guys. Yeah. Okay, coming back to the analysis which I actually wanted to talk about on the market, right? What really happened on that day is this. Let me just put this up. Okay, if you look at the thing here, right? Here, okay, let's put it bigger. Okay, so if you look at the thing here, what really happened is this. Okay, so if you look at the slide here, right? Not the slide, the chart here, right? This is actually one very long green candle, but what is actually behind that is actually more interesting and more important. Okay, what is actually behind this candle? So in order to see what is actually behind, right, we actually go into a lower time frame, and we go to the lowest. Let's just go to the lowest time frame of 1 minute, 1 minute time frame. Okay, so we know by the minute how would the market really react to the news that Russia has actually invaded Ukraine. And let's put use S&P, right? Let's use S&P. Okay, let's use S&P. Okay, let me see here. Just a sec. If you have any comments, just post on the comments, right? If you have any comments, just post there so that I can also see it. Let me see. Okay. 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 All right. Okay. Back to the chart. Okay. So let me see. This is S&P. Where is the minute chart? And where is the time? 24th. Okay. So 24th is here, right? Let's put it the day. Let's delete this. Let's delete this. 24th is here up till 25th, 3, 5 a.m. somewhere. Okay, somewhere here. Okay, so the timeline which we're actually talking about is from here, 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 from here all the way till here. Okay, so this is actually the event where you actually saw the big candle, right? The big candle, the long candle which you actually saw, and that is actually the day, the event from here to here. And the market has actually just gapping down from here. This was the previous day, and it actually came all the way down 210 points that day, and 2.6% gap down on opening, 2.6%. Okay, so that was actually what has happened. Okay, but the interesting thing is this: did the market continue to go down after that? After that opening second, right? Second or minute lah, because this is actually one candle depicts a minute. Okay, so how many candles did you see here? How many candles did you see here? It's only 1 minute. The whole world, not the whole world, the S&P 500, the market reacted on this. Firstly, drop down 110 points, 110 points, drop down, get down 110 points. Then only a minute, yeah, it started to go up back. So this is actually the one candle, 1 minute, and it actually started to go on the next minute. But the scary thing is this. The scary thing is this. If you look at the how to say, if you look at the, because all the individual stocks, the 500 stocks will make this index. First thing, market drop. Of course, the market drop, the individual stocks will also drop. And on the first minute of the market opening, right? I still recall, because my handphone was having all these alerts. It just keep on pumping alerts. All the stocks, 52-week low, 52-week low, 52-week low, 52-week low. If you put in a watch list in, say, Yahoo Finance app, right? Whenever the stocks drop in a bigger value, right? The Yahoo Finance app would actually prompt you. Yeah. So please, if you have a list of stocks which you actually want to buy, or want to invest, or you have in your portfolio, just put in as a watch list in the Yahoo Finance app. And of course, any major things that happens, it will pop there. And of course, if you don't have time, at least when you see it, then of course you know that something is actually happening. So on the first minute of the market, the handphone was just beeping, ding 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 ding. And of course, if you are a investor, and if you're actually not not exposed to actually how to react during this kind of situation, you would have panic. And of course, what do people do when they panic is that they do the wrong thing, is that they sell, they cut their shares. As I said, if it is a long-term investments, then of course, over a long time, this kind of situation may only be a blimp. So technically, there is no reason for you to actually sell your shares. Of course, you can sell it right now, thinking that well, if the price go down further, I will actually buy it back. But not necessarily. Not necessarily you can actually do that. And of course, if you look at the current situation here, the market has actually rallied all the way a full day after opening. It has only gone all the way up. And of course, at the end of the day, right, it has actually closed above this line here. Do you see this? Do you see this? At only about 3:30 means 1.5 hour before is 1.5 hour before market close, right? It has actually breached, recovered back that 113 points decline, and it has actually then closed about 4288. So it was actually around here 4222, and here it actually closed at 4289. Yeah, so basically about 60 points, 60 over points up during that day. So that's why you saw the candle earlier, right? That it is actually a very long green candle here, long green candle here. Yeah. But behind it, this was really what was actually happening. And in fact, during times of volatility, and this is also one important thing is that really don't just look at what is actually happening in the stocks which you are trading, or you go down to the lower time frame to see what is actually really happening, because that gives you a lot of signals also, whether the thing is actually becoming worse, or whether it is basically an opportunity for you. And of course, if you had actually looked at the market during that day, right, and the trend was only going up, right, then of course the first thing is that you won't go into a panic mode to actually start selling your shares. You would actually go into a buying spree to find opportunities to actually buy stocks. Why did I say buying spree? Is that of course, uh, let's just take Microsoft. Let's just take Microsoft. Okay, you look at what happened to Microsoft during that day is also this very long candle, very long candle, from the low point to the up point. Basically, Microsoft movement, right, from that time was all the way about, oh no, I take this. All the way it was about how many percent? Almost 9% up. Yeah, almost 9% up, 23 points. Okay, of course, you would not probably pick the share out all the way down at the lowest point, but within the day you would have actually opportunity to actually buy Microsoft between the lowest point of 272 and also 2295. Yeah, between the day you would have opportunity to actually do that. Yeah, if you want to actually go into stocks like Microsoft. Of course, there are other stocks which had similar things. Yeah, you see, Apple. Apple is the same. Very big long candle, very big long candle during that day, where you had opportunity to actually buy Apple at 151 all the way back up to 160, 63. Yeah, again, I'm not saying that the price subsequent to this will not come down. Yeah, will not come down. But of course, if it don't come down, then of course you would have already gotten one tranche of your investment into Apple. One opportunity you have actually already taken it, and if it goes up all the way after this, then of course you would have actually bought it at a much cheaper cost. Earlier that was about 7 or 9% for Microsoft, and of course Apple would also be quite a lot. Yeah, 7 or 8% here also. Yeah, so that's the thing. Yeah, run into lower time frame and look. Okay, the other thing which you guys also can see is actually to look at VIX. Okay, again, in our last shows, we talk a lot about VIX. VIX is actually the volatility index. It measures the volatility of the S&P 500 index. Yeah. So the other thing which you actually can look at is actually VIX. Again, when you look at VIX at a so-called a single day time frame, it would also, you can only see a very long candle. But again, during the trading hours, if you actually dissect and look at the movement of VIX on a lower time frame, if you go on a minute to minute basis, you will also see that the so-called fear, what was the tip of the fear, when was the tip of the fear, and when it reached the tip of the fear, what has actually happened after that. So if you look at VIX, right, and of course this is even more even more useful if you are actually trading. Yeah, trading, this is actually even more useful if you are investor. Okay, it may not, you may just look at the so-called level of VIX trading at that time, about 27 points to the top, 37 points. That might just be an indicator for you. But if you are trading, then of course the lower time frame VIX would also give you a better perspective of what is actually really happening behind the market. Let's put it 1 minute. 1 minute. 1 minute. Again, same thing. Lower time frame. Look at what happened to VIX. Look at what happened to VIX on that day. It should be 26. No, this is not here. You got to find the right day, but you can see when there is spike, big spike, then this is okay. So this is actually the day, the VIX here. Yeah. So this is actually the day. Okay, what has happened? VIX from a level of 30.1 here, it has actually gone all the way up on opening when there's 110 points down, right? It actually gone to 37. Yeah, about 37 here. Okay, and on 37, okay, peak of it 37, it started to actually come down. Okay, and to about 36, and then it picked back up here. And this is actually within 16, no, this is 16, 15, 9, 19. Okay, this is 19 minutes. No, wait, 16, 3 minutes. 3 minutes. Okay, this is 1621, right? This is 1933. Okay, so in 3 minutes time, right? So the fear of the market only lasted for 3 minutes. 3 minutes here. So it's actually from here to here. Yeah, like just now, the S&P, you also saw for 1 minute, after the first minute it actually started to go up. So on the VIX side, you see the fear was here, it came down to 36, it went back up to about 37, 38 here, and then subsequently it started to actually go down. Yeah, it started to actually go down. Of course, when it actually started to go down, and of course you can take a level of this about 36. Once it goes down to about below 36, then of course, as a trader, then if you actually want to trade it, then of course there is already an opportunity for you to actually trade it, because the market is not going down, but in fact it is actually going up. And of course, if you are shorting the market, then of course, if you have not looked at VIX and you started to short and you thought that the thing will actually continue to go down, then that's the painful experience which you would actually have. Yeah, because that day basically VIX has actually gone all the way down. I think back to here. Yeah, so it has actually gone down all the way back to where it actually started. VIX, it has actually gone down all the way back to where it has actually started. That means basically VIX has actually opened at around 30, 31 here, 31 here, 31 here, and it has actually closed that day at about 31. Yeah, so this is VIX. Yeah, VIX. And again, VIX, it always have the same story. VIX actually always have the same story. as we have said many times, even in one show where we actually talk about VIX, when VIX goes above 30, that is the time where you can actually start to look at shares to buy. Yeah, look at shares to buy when it actually goes up above 30. But of course, right now, VIX is actually trading at the level of 30s. Yeah, so of course, you need it to actually spike above. Because now it's actually at 30, then you need it to spike above before looking at an opportunity. If it was earlier before that at 20 something and it goes to 30ish, then of course there is a chance. So you look at the current level of VIX trading, and if it spikes above that in a significant way, that's the time where the opportunity will actually come. And the same thing as I said, VIX actually how to say, move in a very predictable manner. VIX actually move in a very predictable manner. How can I want to go back to one day? One day. Okay. VIX happen to be very predictable. Oops. Let's pick this. And I'll just point out three events for you guys. Three events. Three events for VIX. Okay, where are we now? Come back. Okay, let's look at this. Just to show you that VIX is actually very predictable, and because it is actually so predictable, right? Even the traders, right? The traders and also the so-called robot and algorithm traders, right? Also set their so-called parameters based on actually how VIX reacts, and basically what kind of action they take. They take. Okay. So it's preset. When VIX go to this certain level, they will do something. If VIX spike, then maybe they will say, okay, cut shares. And when VIX goes to a certain level, buy shares. So all these are also preset. Preset. Okay, so this was actually one spike, 24th, right? 24th. I put here 24th. One very big spike on 24th. And here is another spike, 24th of January. 24th of January. This is 24th of February. And this is another spike, 3rd of December. Okay, 3rd of December. So there's actually three spikes in the past 3 months. Three spikes, big spikes above 30 level. Three spikes. Yeah. Now VIX is 30 something. Earlier it was actually only hovering at 20 something. Okay, so VIX is still elevated right now. And if you go to S&P, right? S&P, you look back at the same thing. Okay, so this was 24th to, and this was 24th one, and this was 3rd December. Okay, so same date. Yeah, so same date. VIX spike, 3rd December, 24th January, 24th of February. Yeah, same thing. Three spikes in VIX above 30. Okay, and look at the S&P. Look at the S&P. What happened? Okay, so on 3rd of December, which is actually this candle here. Although it's red, right? It's actually a bullish. That means market has actually sold down a lot during that day. Sold down a lot. That means it opened higher. And then it sold down. Okay, so 3rd of December, VIX spike, sell down. Yeah, to here, and at the end, the closing was actually higher. And post that, market has actually gone up. Yeah, one. 24th of the January, yeah, market closed here the day before. Okay, opening, sell down, VIX spike, yeah, go up. After that, market has also effectively gone up. Yeah. So again here, 24th of December, yeah, 24th of February, yeah, came down, yeah, market has actually gone up, yeah. So again, all these, how to say, I mean, so-called repeatable patterns, we have to actually also keep an eye on it, yeah. Okay, so any questions you guys have? Anything you want to actually clarify about VIX, about the S&P, or even the earlier points which I've actually mentioned? Put in the chat, then I would actually answer them here. Yeah. So now the market has basically, how to say, the market has was it red or green? Let's just check on my Yahoo. Okay, Yahoo 30 points down, S&P futures, Nasdaq 105. Okay, again, the futures, of course, is an indication, because futures actually trades I mean, it opens, right? It opens every time, right? But of course, the market, it is not really going to open exactly the same as the futures. Okay, just like yesterday itself, right? Just like yesterday itself, when the market, when the futures yesterday, right, if you have actually saw the futures before the market open, right, it was actually down about 100 points, I think. Yeah, the futures was negative 100 for S&P 500, and negative about 200 over for Nasdaq. Okay, but of course, when S&P open, right, when the market actually opened, it was only down about 50 over points. So instead of 100, and you are going to mirror it to go down 100, no, S&P actually opened about 50 points down. And of course, if you look at the closing yesterday, it was actually about minus 10. Yeah, minus 10. So it opened down 50, and then at the end of the day, it actually closed minus 10. That means during the day, the S&P has actually went up. And of course, on the Nasdaq side, earlier S&P futures was minus 200 something, right? Then during the day, it has actually opened up, I think, minus 100, if not mistaken, minus 100, and then at the end it was plus close to 50, plus close to 50. Yeah. So again, the price action, if you are a trader, look at the price action, especially on the lower time frame. And again, if you actually want to match it, if you're doing even going to intraday trades, always match the movement of the market, S&P, also together with the VIX. Yeah, also together with the VIX. Yeah, if you can go down to the lowest, the 3 minute time frame, just look at the three minute time frame, and actually look at how the actually market moves between the market and also the VIX. Yeah, general principle, when VIX comes down, the price of the index would actually go up. Yeah, so that is basically the general principle. You can actually use that as one of an indicator also, as trading. If you are also investing, if you feel that you're not comfortable whether the price will actually go further down or not, you can also use this kind of very short-term indicators to get the comfort whether you actually want to buy now or wait a bit of longer. But of course, as an investor, if the buy points are already hit, right? Yeah, close eye, you can actually do it. Yeah, and of course, if it goes down further, move it down to your second or third or fourth tranche. Yeah. All right. So, I mean, now, of course, the market again. Generally, I would say that we are really not out of the woods. Out of the woods means that we are not really going to say that the market after this will continue to actually rally up back to the all-time high. Okay, the so-called risks are still there. That means the market can continue to be volatile. Three days up, 2 days down. Can still happen. It can still happen. So as I said earlier, also if you are trading, watch your time frame. Watch your time frame, and also the profits. Yeah, if you actually get profit, get some profits. Yeah, you can actually exit the trade if you are in multiple lots. Basically, you can size out your trades to actually lock in the profits. Yeah, and if you actually want to wait further for more profits, then at least those which you have actually sized out, you have already locked it in. Yeah. So keep an eye. Volatility is still going to continue, and for the market, I would say the threshold which we are still looking to breach is still about I would say, let's see 4,000, 4,000, about 4,500 level. Yeah, so 4,500 and 4,600 level. Yeah, so for S&P, 4,500 and 4,600 level would actually be two key hurdle for the S&P to actually bridge next. Yeah, 4.5 and 4.6. So I mean, overall, if you look at all the stocks, basically it is similar to the S&P pattern. S&P pattern is actually going up. But some stocks, I would say, have reacted quite how to say quite differently. One of the things which I also want to share with you guys is this. Last week, some people actually asked about this PLTR, right? This PLTR. Yeah. Okay, so on this PLTR, right? Of course, one thing which was very different from the other stocks, during 24th, that means during the day when the market dropped by almost 3%, right? And all the S&P component stocks were opening gapping down, yeah. Okay. This stocks PLTR was basically holding on very strong during that day. Yeah, during that day, I think it was about $10. I think here at about $10. Yeah. So it was actually basically around there, lah. I mean $10, lah. Yeah. So again, possibly this stock has actually already reached what we call capitulation. It means that there are no sellers anymore. Anybody who wants to sell in the market would have already sold. And of course, yeah. So basically, the selling pressure for PLTR has already reached a state where, I mean, chances to go down might be less, lah. I mean, that was what I felt during that day, because I have also some positions in PLTR, and of course during that time I was actually thinking of whether I want to actually do some protection by selling some calls, you see. Yeah, but of course I did not do that. And thankfully the price has actually all recovered. I think that time was about $10, right? So it has actually gone all the way to about close to $12, 11.80 something. Yeah, so almost um, 15 or 20%, 20% up. Yeah. But anything can happen lah. I mean, basically, we are also looking at the price action of the chart, right? Yeah. So, what are the further downside risks, and basically, what are the further upside risks? Yeah, not upside risk, upside gain. But of course, for this stock, I don't think that it will shoot back up very fast to 34 or whatever. I mean, even if it actually recovers based on its future potential, right? It can only slowly grind back up, lah. Yeah, yeah. I don't think all this parabolic increase, right? Yeah, is so likely in current markets like this. Even if it happens, right, it will give back the gains quite fast. Yeah. So this is yeah, so this is PLTR. So yeah, so stocks, I mean, basically there are a lot of good stocks. I mean, of course, the price is of course now already higher, and of course, if you have missed the buy in during 24th, right? You can continue to actually wait for a retracement to come, if it comes, like if it comes a retracement, yeah, before going in, yeah, because the prices of course right now has gone back up to pre pre pre-war pre-war. Yeah. Baidu today, I think they announced good earnings. Baidu 23%. Yeah, Baidu announced good earnings. Yeah, so pre-market is actually already up $6. Yeah, $6 Baidu. Yeah. Yeah. So Baidu is one share, of course. Is also very volatile. Baidu is actually also very volatile. But from the past few rounds, right? Basically, there are certain levels, right? Don't count this, like. I mean, don't count this, like this. If it happens, it's good, lah. Yeah, yeah. There are actually certain levels where when it actually comes down, right? Yeah, when it actually comes down, yeah, it will actually recover fast. And of course, this was an opportunity. This was an opportunity at 140, right? It was an opportunity at 140. Yep. So these are the so-called levels, right? Yeah, about 140 are the levels, which we you might want to actually look at, yeah, for trading. I mean, investing Baidu, okay, there are potential, of course, but overall on the China side, however however good potentials, right? The government is actually one very big influence that can actually kill any company it likes, lah. So basically, there is actually still uh, big. I mean, still risk on investing in China stock. Although prices are low, lah. Yeah, yeah. Although China prices are low, there is actually risk. But of course, if you're talking about trading, then no issue if actually a good opportunities comes by for you to do some what is this bull put spreads, yeah, bull put spreads here, yeah, or even buy, or even debit spread, yeah, debit spread when the price actually dips significantly. Yeah, debit spreads give some time for it to recover. Yeah, 45 days to 60 for debit track. Debit spreads is okay. If you do single call, of course, I would say the risks are actually much higher, lah. If you, because the the China stocks can go up and down, yeah, yeah, and it can take a long time to recover if it actually goes down. It tend to trade along sideways for some time. Yeah. Okay, go. So good. So happy trading, guys. I think again, market might open green today. Might open green today to continue the momentum up. To continue the momentum up before reaching the 4 5 level, 4 5 level. Yeah, it will continue momentum up before reaching the 4 5, and once it reaches the 4 5, watch for it to see whether it can actually break above 4 5. Yeah. So until next week. I catch you guys again next week. And until then, happy trading, and don't forget to trade and thrive. Yeah, I'll see you next week. Bye bye.